What time is it? Game time. Oh yeah. Talking about some money today. You ever the Birdman hands? It's like, yeah, I'm ready today. Good morning, everyone. This is Financial Literacy 101. TGIF. Thank God it's Friday. I know everybody's glad. Some people are not if you work nights or you work weekends. But nonetheless, we're going to get into it. We're going to talk about some money. We're going to talk about some stocks that could potentially, over the course of time, make you guys some money. All right, let's get into it, ladies and gentlemen. So first and foremost, we're going to talk about Airbnb. I did a stock review. I did an IPO release on Airbnb quite some time ago. Now, when Airbnb first came out, Airbnb was around $68 per share. And, I told people, buy it on the dip, buy it when it first comes out because of the pandemic, because they released themselves in the pandemic. And most people are like, well, I'm not going into somebody else, pandemic. That's a lot of people did. And I believe that you should absolutely buy into Airbnb before it explodes. Now, we understand how Airbnb is making money. They're much cheaper, in my opinion, and from my research and statistics, than a regular hotel, than even a Holiday Inn. Most likely when I travel, I do travel Marriott because I have like Marriott reward points and I'm trying to accumulate blah, 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 right? But if I'm staying somewhere for a long periods of time, you may want to look into Airbnb, not only as a customer, but it's going to also help your investments if that's the way you're thinking. So with these new vaccines, and I was just reading an article here. I don't agree with the article, but I think that is really good information for you guys to hear. It says, good morning. It says the CDC said response to scientific evidence and says vaccinated people really need masks. The Center for Disease Control and Prevention is finally catching up to the science. For months, research about COVID-19 has pointed two encouraging patterns. First, the underlying virus that caused COVID-19, blah, 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 right? But all that really means is that people are getting out more so now than ever, especially during the beginning, the middle. And I still believe, we're in the height, but because of people getting vaccinated, they're not having the hospitals and clinics and other medical facilities overwhelmed. So it's important to stocks like Airbnb. Again, I tell you guys to look at the different variables and how things relate and how things are connected. That way you can be a very intelligent investor. By the way, very good book, Intelligent Investor. But you have to look how one segment or one thing in the ecosystem of finance relates to other things. So when it comes to COVID-19 vaccines, right? If you would invest in some of those stocks, you would probably be a millionaire by now, right? Especially if you would have bought it as low point and sold it as a high point. When it comes to Airbnb, as we're looking at Airbnb right here, ladies and gentlemen, we see right now is at $136. Now, when I gave this IPO release a couple of months ago, before December, I told people invest in Airbnb because once the pandemic is over, people are going to go back out and use Airbnb. Now, Airbnb at one time was $212, okay? Now you notice it's on the dip, but it's still worth more than an IPO release date. Do I believe that you guys should invest in Airbnb? Yes, I do. Now, over the past 5 years, Airbnb has been up 100%. Of course, it's still within the past year. The last 3 months, they've been down 37%. The past month, down 25%. The past week, down 13%. And today, they're up 0.5%. And you're probably asking, why in the hell would I invest in Airbnb? Because you absolutely should. Because again, you're buying on the dip. This will come back. Okay, this will come back. It says here that Airbnb engages in the management and operation of an online marketplace. Its marketplace model connects hosts and guests online or through mobile devices and through Bookspace. Okay, this company was founded in 2007. It roughly has around 5,600 employees. Okay, Let's see what else. Consumer services and retail, travel booking, upcoming earnings. Buy at 35.3, hold at 55.9, and sell at 8.8. You guys know my ceiling when it comes to the sell rating. Anything over 25%, I kind of look at with a side eye, but when it's under 25%, I'm most likely thinking that it's going to be a good investment over the course of time. Now, I'm going to focus on the bulls, okay, because the sell rating, I'm not going to focus on the bears. It's not even at 20%. So the bulls are saying in bulls versus bears, bulls are banking that the market is going to go up. Bears are banking on the market go down. And the reason why I'm using the term banking is because that's how they make their money. They're betting on the market to go down. Bulls are banking on the money and betting on the market going up. It says here their Airbnb network has reached critical mass scale, supported by this leading booking share of the alternative accommodation market and ongoing expansion into experiences. Mobile application users is increasing rapidly, and Airbnb has strong global awareness, which aids as roughly 90% of traffic that comes directly and through organic search to its platform. Outside industries, online travel, booking growth witness. The past few years should continue over the next 10 years, including virus impact. Given low penetration levels and increased online usage, and Airbnb is well positioned, okay? If you look at the last quarter, it was up. So it's not doing bad. You see some of my positions here. I bought some, I sold some. I had I believe this was an option that I got rid of. People that's in this space, none of these really, but most stocks are doing pretty well this morning. So long-term Airbnb, long-term and hold. That's where the money is, because as we get through this pandemic, and quite frankly, we're going to be in this pandemic, ladies and gentlemen, party for the next 2 or 3 years. I mean, even with people getting vaccinated, I know I read you the CDC report, but there have been cases where people who have been vaccinated, whether it be by Moderna, Astra, Pfizer, and also Johnson & Johnson, has still contracted COVID-19. And out of some of those contractions, some of them still went to the hospital, but not in the same numbers as we were before. So that's to keep in mind. Let's move right along. So next we're talking about Teladoc Health. For the past 5 years, this particular stock has been up over 1,100%. And if you're looking at the price tag, ladies and gentlemen, again, you can invest on Robinhood, WeBull, M1 Finance was a fraction of your money, $5, $10, $20. You don't have to buy the entire share. You can do fractional investing. Over the past year, it's been down 27%. The past 3 months, down 55%. The past month, down 30%. The past week, down 11.3%. And then today is actually up 2%. Buy this stock before it blows up. Because over at Motley Fool, those guys are Mensa investors, and they have a report saying that one of the world's top health platforms is facing headwinds after PepsiCo, that's Pepsi and Cola, stopped using the service due to a lack of integration with its existing health plans. Keep in mind, PepsiCo, 120,000 U.S. employees account for only a fraction of the firm's 52 million paid U.S. members. Teladoc has sunk ample capital into becoming a one-stop medium for healthcare needs, providing consultation for primary care, behavioral health, chronic illnesses, and telepharmacy. It thus far lagged behind the terms of providing enterprise healthcare. Ladies and gentlemen, this is imperative because when you have companies like Amazon, they deal with sending out your prescriptions and things of that. That's that telepharmaceutical where Teladoc are being contracts with Amazon, just for an example, and send you your pills. And some of their consultations is only $40 a visit, where you may show them a rash or talk about any issues that you may have. Maybe it's a therapy session. If you have subscriptions and memberships to this particular service, over the course of time, telehealth will be worth more than you can even imagine. So when I'm looking at the price tag here, this is nowhere near which is going to be actually valued at in the next 5 years. I'm expecting for this stock to go up to $250 within the next 3 to 5 years, if not sooner. Okay. I mean, until the massive shift to employer-based telehealth solution completes, Teladoc remains the king of commodity when it comes to telemedicine. I mean, during Q1 of this year of 2021, its revenue grew by 151% year over year at 453.7 million. I mean, at the same time, its operating income, less non-cash expenses, increased to 429%, which is equivalent to 56.6 million. I mean, in addition, its urgent care-based model can quickly scale across 175 countries that it operates in. It operates in, are you listening? 175 countries. Since it is already an integrated stop for telemedicine, the company could develop an enterprise healthcare solution right away to the match and shift consumer dynamic. Very, very important that we look at this stock long term. I know a lot of you want to dive in, put a lot of money, man, when I'm gonna get my money back, when I'm getting a big return. Listen, you can't look at it like that, ladies and gentlemen. Investments are for the long term. Investing for the long term. If you're thinking you're just gonna turn the wheel, throw a couple of hundred in somewhere, and boom, you're gonna be a millionaire. That's not the way it works. Most millionaires who became millionaires based off investment took years, because at the end of the day, let me tell you, you can't make no money like that. You can't make no money like that. The way you make money, let me tell you, is you do long-term investing, okay? Just because a new hot stock like Dogecoin came in the market, you trade some of your stock, sold some of your stock, transferring them over, and you probably lost. Now me, I kind of bought it when it was low, so I made about $1,500 off the stock, okay? So I made $1,500 off the stock. I know a lot of people put a lot more money, made a lot more, and they got out of Dogecoin because a simple tweet from Elon Musk has literally sunk Dogecoin and Bitcoin, and in some cases, even Ethereum. See, we can't allow certain individuals to control the stock market, because this is dealing with your own wealth. I'm gonna leave it right there because I got more to cover. Okay, I got more to cover. I don't want to get stuck right there. All right. Nonetheless, Teladoc Health engages in the provision of telehealth services using a technology platform via mobile device, the internet, the video, and phone. Its portfolio of services and solutions covers medical and from non-urgent episodic needs like flu and upper respiratory infections, okay? So we know about this company. It's telehealth. Everything is from your computer at home. It was founded back in 2002 and purchased New York and has roughly 4,400 employees. Right now, the analyst on Robinhood gives it a 63% buy, a hold around 35%, and a sell at 3.1. I pretty much read all the market capitalization and analytical information, so we're going to skip right over this and look at the earnings. The earnings have been pretty much steady for the most part, but for Q1, it has dropped off. And the reason behind that is vaccines are going out. I think a quarter of the country has been vaccinated. If I'm not mistaken, is it a quarter of the country? I think, no, a quarter of the country. We had 330 million. No. It hasn't been 100 million people yet. No, it's not a third of the country yet. I want to say probably a tenth of the country has been vaccinated. So as we go through these different trends and waves of COVID-19 spiking in this state, COVID-19 being lowered in this rate, you're going to see this stock be somewhat volatile as we kind of get a steady baseline of systemic pandemic percentages of people either contracting or getting vaccinated. That's why I'm saying this particular stock, look 3 to 5 years out. But believe me, buy it low, buy it on the dip, buy low, sell high. Right now, this stock is really low. I'm trying to tell you, if you look at some of their contracts and you look at some of their future revenue projections and predictions, you're going to make some really good money. But you got to be patient. You have to be patient, and you have to buy this stock now. You have to buy it on the dip. Okay, let's look at it one more time. Here we go. You have to buy it on the dip, ladies and gentlemen. Right now, it's only $135 per share. All right. Moving right along to Maxar Technologies. And if you notice, a lot of stocks that I'm showing you this morning, they're down, and they've been down. Because again, we're looking for what? Future projections and future predictions and forecasted amounts over the course of anywhere from the next year to 5 years, okay? Because if you were sitting $150,000, $250,000 richer based upon this information, you might want to stay tuned. Now, over the past 5 years, Maxar technology has been down 55%. The past year has been up 244%. That's pretty good. Down almost 40% in the past 3 months. The past month, down 19%. The past week, up 0.5%. And today is up to 3%. There's a lot of things going on with Maxar Technologies because they have a lot of international customers, mostly from the Middle East and Asia. And what they're doing right now is that they have become a trusted partner and innovator in the Earth intelligence and space infrastructure. They actually announced last year of a contract that was valued more upwards of $120 million with the international defense and intelligence customers for uninterrupted access to their current satellite and constellations. I mean, their contracts include 1-year agreements and 4 multi-year agreements that would allow customers to continue serving the country's national security and domestic missions. I mean, national disaster responses and maritime surveillance. One customer has also contracted Maxar to upgrade its satellite ground station and antenna. So when I look at particular things like that, all these multi-year contracts that they have. So again, these contracts stem from last year. For a year, even we're up to 4 years. They have multiple Middle East, Asia, and also US government contracts. So when we look at that, a lot of them are asking them, hey, we want you to innovate. We want you to upgrade your ground satellite based antenna so we can listen and get data and transmissions further and longer. We either be through space and directly triangling down onto the Earth. I'm not gonna get into that, but you get what I'm getting at, right? Because technology, when it comes to satellite technology, you don't really hear people talk about it. But ladies and gentlemen, when we start talking about robotics and computer upgraded nanotechnology, et cetera, right? I'm almost talking out the side of my neck. But the point I'm making is we have to understand some remnants of technology in order to understand what we are truly investing in. Because when they're making a satellite, they're using precious metals. They're using silver because silver is a great conductor of electricity, believe it or not. Okay, and they also use silver in solar panels. Believe it or not, you've seen some satellites that had solar panels. They're being recharged and energized by the sun. Then when we talk to microchips and semiconductors, you see all the intricate pieces that goes into a satellite. Is not just a big hunk of metal with an antenna up in space. So when I look at companies who create satellites, I also look at the subsidiaries, and I also look at other contracts they may be in bed with, because I know some of the technology they need in order to create a satellite, okay? So I really wanted to get into that so you guys understand the technology piece of that, so you guys are well-educated investors. I can't just, listen, if you don't know what you're invested in, don't invest into it. Don't just take my word for it, okay? The reason why I give you this additional information, so you have that information. So somebody say, well, why are you investing in that? Well, based upon X, Y, and Z. Listen, I don't need the credit. Don't say, well, I got it for Financial Literacy 101. Say, hey, I did my research. I did it for you. And so you can speak to your investments. You always need to speak to your investment, because here's the thing. Your child does something. The first thing you ask him, why did you do that? Now that's the whole thing I'm going to ask you. Why did you make that investment? Don't say because you told me to. Because if your kids went out and kicked trash cans around the neighborhood, like, why did you do that? Well, Johnny told me to. You get what I'm getting at, right? I know this is a little different than that, but you get my drift, okay? So let's get into it. So Maxar Technology provides space technology and solutions, delivering unmatched end-to-end capabilities in satellites, robotics. What else? See, I told you about robotics. I didn't even know this. It said Earth imagery, geospatial data analytics, and insights. It says that its segments include space systems, imagery, and services. So they're all over the board when it comes to what? Technology. technology. Okay. Good morning, Mitchell Liggins from Alaska. It says that the space infrastructure segment supplies space-based infrastructure, robotic subsystems, and information solutions to government agencies and satellite operators. Said the company was founded back in 1969 and its headquarters in Colorado. Okay. What else is pertinent here? Look at this. I love this. Buy at 50%, hold at 50%. What that's telling me is when I buy it, hold it. That's all they're really saying, because again, we're looking at investments anywhere from 1 to 5 years. Okay. Their quarterly earnings are all over the board. I mean, it's like an EKG meter. So again, we're buying this stock on the dip. All right, let's look at it one more time, because we're buying this stock on the dip. Let's look at the past year. Not too bad. So that's Maxar Technology. You really should be looking into that. And the ticker for this one is MAXR. Last but not least, Herbalife. A lot of you are very, very familiar with Herbalife. I remember someone approached me about Herbalife. It's similar the way they do this subscription membership, like Mary Kay. Remember Mary Kay? You had all of these vendors, they door-to-door salesmen, or they set up a stand at some fair or carnival where they're selling these products. Herbalife was actually created by a British colonel who's actually black, which is a great thing. And it's basically a low-carb shake. I mean, that's pretty much what it is. It has some good ingredients. Let's look at that very, very quickly. It has some ingredients in here. Low carb for, let's see, every scoop, it's only like 5 grams of carbohydrates. It has 1 gram of fiber. We're looking at vitamin A, vitamin C, calcium, all the B vitamin, vitamin E, vitamin K, thiamine, riboflavin, niacin, vitamin B6, etc. Right? Potassium, sodium, cholesterol, blah, blah, blah. Right? It has no cholesterol, by the way. My bad. And it also has copper, magnesium, and all these other things. So it's a very, very healthy supplement, maybe to replace a meal or snack, or healthy snack. And right now, Herbalife hasn't been doing too well, but I believe as people, especially coming out of this pandemic, they're going to start getting into health really strongly. You're going to get back into the gym. I was looking at gym memberships. I was looking at statistics. I was trying to find a good stock for you guys to invest in for gyms, but I'm going to just keep it at 4 stocks this morning. So over the past 5 years, Herbalife has been up 56%. The past year, been up 30%. The past 3 months, been down 11%. The past month, been up almost 10%. The past week, up 0.38%. And then today, as the market's about to open, we'll see how they're doing, okay? And it says here, the Herbalife, also called Herbalife, is a holding company which engages in the development and sale of nutrition solution. It operates through the following segments: North America, listen to all the places that this Herbalife is operating in: North America, Mexico, South and Central America, Europe, Middle East, and Africa, Asian Pacific, and China. This particular product is worldwide. The company was founded by Mark Reynolds Hughes in February of 1980 and is headquartered in Georgetown, Cayman Islands. The listed name for the Herbalife is Herbalife Nutrition, okay? Again, headquartered in Georgetown. Okay, founded in 1980. And the CEO today is John O. Agawanubi. And I think I misspoke when I said that this is a Black created product. What I meant to say is that the CEO of Herbalife is Black. And we're going to take a quick look at him just so you guys can see him. That's him. He used to be a British colonel, okay, a British colonel. And just so you can know more about him, I'm not going to butcher his name. I'm just going to call him John. John is a former U.S. government official, a formal trained podiatrist and chief executive officer and executive chairman of Herbalife Nutrition. He was formerly senior vice president of Walmart and president of the retailer's health and wellness business from 2007 to 2014. So he worked for Walmart for 7 years. He was born in the UK in Dundee. His nationality, believe it or not, is American. His rank was Admiral, years of service, only 2 years. Service branch, U.S. Public Health Service Commission Corps, okay? His education is from Georgetown University, Howard University, and University of Georgia main campus. So that's about the person who's behind the movement and market of actually trying to build Herbalife back up. Because I want to say the last time I heard someone really talking about Herbalife was about 5 to 6, 7 years ago. And then recently, about 3 or 4 months ago, I heard someone talk about Herbalife again, which made me really think, what are they going to do to make this stock more profitable? And they're doing a lot of things to really generate for people to start to encouraging people to buy more shares. Okay. So when we look at that, it says here, sales last to his Herbalife shares any involvement in the company. This is huge because this particular investor, he had 5 million shares in Herbalife. Okay. Let me move on. I'm going to come back to this story. Here's the quarterly earnings. And that's about it. So let's go into the story a little bit more. They say it says last. So Herbalife, why it matters. Now let me blow this up. He said, this is the coda to one of the most public and contentious fights in history of active investing, long positioning, wiping the floor with Bill Ackman short positions. He said, 1.3 billion from his Herbalife bet, while Ackman, who cashed out in 2018, lost nearly $1 billion. The bottom line, the time for activism has passed as Herbalife has grown, and I don't typically invest in billions of dollars in companies where our role as activists is not needed. So this is based upon his emotions and feelings. That's what he's trying to say. He's like, you know, at one point, being an activist of health and nutrition, this was a good cause. Now that Herbalife has grown so much, so fast, that it's no longer an activist cause. Now it's just a company that's selling supplement products. Okay. And more times than not, you gain 1.3 billion after you sold your shares. He had 5 million shares. He sold them. He became even a richer billionaire. Take it with a grain of salt. But nonetheless, I believe that Herbalife could be a really good stock for you guys to invest in. Again, we're looking at investment for what? 1 to 5 years, okay? As I'm looking at my portfolio, it's bouncing back. Today, I made $1,000, but I was down $1,000. So when I look at the past week, my portfolio is in shambles. I've been doing horribly bad. The past week, I've been down $3,000. Can anyone see that? I just want to show you. I'm not capping here. The past week, I've been down $3,000. So me making $1,000 a day is absolutely nothing when you lost $3,000. This kind of makes you sick. It kind of just make you want to throw up. But nonetheless, I'm back in it. I'm into that cash money. This is Financial Literacy 101. Learn money and be inspired. You guys have a great and wonderful day. And please tune in this evening at 7 p.m. Central, 8 p.m. Eastern time, where I do my when I do my cigar talk, and I talk about everything. I think tonight I'm going to talk about nails done versus nails did. I'm talking about your image and appearance. That's your image and appearance. Goals and dreams. Talk about education. And we're going to talk about how the Democrats continue to put a blindfold on us by using their Democratic public shields and their coon class. I'm out.